Good afternoon. In this video, we're going over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the links in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. I did finish the week with 8 wins and 3 losses for a win rate of 72.73%. Not a great week. The first half of the week, the first couple of days did good. The last couple of days I did not do so good. Below my 85% win rate I like to try to get every week, every month, and at least yearly. But not every week is going to be perfect. Not every week is going to be good. It's part of trading. You're gonna have some bad weeks. You're gonna have some good weeks. You just gotta just deal with it. So, well, you know, me hitting over 70% is a bad week when a lot of these traders that claim to be so good at fantastic at trading that they get excited when they have an 70% win rate for the week, and it's just kind of comical that they're celebrating over 70%. Like it's like a big thing, but yet on a bad week I'm over 70. So that just tells you it's a good comparison. But anyways, traded his room. Remember, this was a short week. Monday was half a day and Tuesday was the 4th, which we had off. So on the 3rd it's a SPY calls over 443.50. There's VIX right here. The VIX gap up. Yeah, it gapped up. And that's one of the things that's been happening every day lately, the last couple of weeks, and that's what kind of threw me off this week. Is that when VIX gaps up, it usually ends up selling off, and it did on it gapped up Sunday and Monday, and it did sell off into Monday, which is where is Monday? Right here. I said what calls over 443.50, which is right here. Yeah, right around here. Yeah, right here. You can see where the high is over here. I mean, I could have used this high, I could have used this one, but I liked it was really banging its head right around this area right here. So I liked that. You can see it was resistance, ended up being support a little bit right here. So I thought that was a good area to so I just rounded down to 443.50. So I didn't quite break it on the first go. So let's see, the first play I took was 943. Okay, the first candle was green, so I took calls of a higher day of the next candle. Not much movement really for this day. So as soon as I got over 443.27, that's when I grabbed the 44.50 calls at 560, and they went from 560 to 670. Not much of a move. I wasn't expecting too much to happen today on this day, because being half a day, most people are already gone. They took the weekend off. They're not going to come back for half a day on a Monday, then take Tuesday off. I mean, most big companies, most hedge funds and stuff like that are going to take the entire weekend and Monday and Tuesday, and some might even take the entire week off. That's probably why it was kind of crazy quiet this week. And so just not much. I wasn't expecting anything really happen. Just expected maybe 1 or 2 decent moves, but it is what it is. So we got that play to start, so I was definitely pleased about that. Let's see, I'm just gonna look at something really quick. Okay. Okay, why did I just screw up my thing? Okay, then the next play I took calls at 1140, which was right here. Pulled back, kind of held VWAP up a little bit. It dipped underneath it a little bit, but it definitely got bought right here and right here and right there, and it went underneath and it closed right there, and it quickly got bought up. And when it got to high day right here, let's say 1140, which was this candle right here, this is where I took calls. Took the same calls of 44.50 calls at 350, and they went from 350 to 540 in that play. So only took 2 trades, call it a day. And see. Then we had Wednesday. We had the 4th off. We had Wednesday. We had FOMC day, which was kind of crazy. Not much actually ended up happening. It was kind of a crazy day. I did take puts at 11:58, which is right here. Let's see. I probably could have took calls right there, but to me on FOMC days, I prefer just to sit and wait out the morning, because if you trade and you take a couple losses in the morning, you're most likely not going to want to trade FOMC. And so I think I have in the past, I had a bad FOMC day, I think once or twice, very, very long time ago, where I took a couple losses before FOMC, and then FOMC came and I didn't really play it like I would have, and it just changed my whole perspective, and not perspective, but just my risk reward. That I just wasn't didn't want to hold it like I normally would, or I just wouldn't take the size like I normally would. It really changed how I played it. So I just prefer just to sit out. I mean, you can sit and play if you want, but to me, I just find it's just easier just to take the morning off, because the only play that matters is actually FOMC. Anything else that happens, I mean, just get lucky and you might get a move or two, but usually FOMC days are very, very choppy, and it's just not worth the aggravation. So I just tend to ignore in the morning and come in the afternoon and just play FOMC afterwards. But I had a nice little setup right here. You know, you got all these candles sitting right here. You got the body of this one, the wick, everything lined up right here at the 443 40 area, and when it broke below it right here, this is where I grabbed it. I grabbed puts. I wasn't even planning on taking it, but as soon as I saw all these candles right here, I was like, okay, I'm going to take it if it breaks below this. So I did. I took the 44.50 puts at 650, and they went from 650 to 770 right there. So it ended up being a nice little dollar plus move on that. So then I waited. I grabbed my FOMC play a little early. I usually grab it like 5 minutes before 2 o'clock, but I grabbed it like 15 minutes ahead of time. I was playing at the money, very, very cheap. I had the 44.50 puts and the 44.45 calls at 550, and the puts were at 6. So then it popped right at 2 o'clock. So I sold the calls, and then when it dropped, I sold the puts. To me, I was looking at it from the point of view, this was the fifth right here. VIX is right around 14. Last FOMC meeting, they said they were going to raise the rates a little bit. The market dipped a little bit, then it just took off. Didn't take the news of it raising rates more seriously. It just like pretty much considered it was a bluff or something, if you want to think about it like that. Like Powell wasn't serious. Like the market was like, no, I don't believe you. We're gonna do this. So the market was just in denial, and so I was looking at it from the point of view that the market's gonna react a little better this time, because it's gonna be like, okay, maybe this is serious. So when it popped, I took calls immediately, and I held my puts, thinking that the market would dump, and it did dump, but it fully recovered. So it kind of blew my mind that it did that. Same thing, more rate hikes were coming, and it dumped. So the calls went from $5.80 to $8. Got a nice little play out of that. Then the puts went from $6 to $12.10. So they went 100% plus on the put side. So definitely played out well. And I thought for sure we were actually going to dump, break down to lower day, but nope, it got bought back up and went back to higher day. The market has just been crazy in denial. It just does not care about anything. Any other time that it talks about hikes, it just dumps. But for some reason, the market is overlooking their 2 rate hikes and just ignoring it completely, which is just blowing my mind. Then we have it dropped off from 443 to 439. So we had a $4 plus drop, almost a $4 drop. So usually what happens is that when the market has that kind of a drop off, well, actually before I get into Thursday, with the trade ideas room, I said SPY calls are 440, which is right up here. Yeah, I just went to the next whole dollar. There wasn't really anything there because 440. Yeah, we weren't even there the day before. So yeah, I went the next whole dollar, which was 440 because we were trading down here 439. So 440 was the area I was looking at. Didn't really want to call right here because the price is right here. I mean, it could just bounce just a little bit and trigger a buy, and I don't like the opening SPY because it does like to jump around a little bit, and if you get too close of an area for a trigger, then it could trigger and fake you out, and I don't really like that. So, but getting back to what I was saying, you have a nice $4 drop, and usually when you have this kind of a drop going into the market open, it likes to fake people out and rip, and so that's what I did. Let's see, my first play I took was calls at 950. I don't know why I did this, to be completely honest with you. I took calls right here, 955, right in this candle. I shouldn't have. I could have avoided that loss right there. For some reason I got ahead of myself. I don't know why. But yeah, I kind of got ahead of myself. So I took the 44.05 calls of $7, and I averaged down at 10.06, which is right down here after it made new low a day, making my new average $6. Yeah, because I initially got them at 7, added more at 5, and I made them at 6. Then it dumped more than I cut them. And I cut them right when they were at 50%. So then what do they do? They rip. So that kind of was. I just don't know why I took it here. I should have taken it over up here, or at least waited for some kind of candles like this to form, and the area to buy would have been right here, which is where I did buy. Right here at 1131, I bought this. I bought the 43.90 calls at 1131, which is right here. I bought the 43.90 calls at 780, and they went from 780 to 1060. So we got a nice little play right there. I was definitely happy about that. Don't know why I did that. Then I bought puts at 222, which is right 222 right here. Okay, I kind of get why I bought it here. This one, very, very questionable. I should not have taken this trade. But like I said, when you're having these big gap downs like this at open, the market likes to trick people up because everyone's going to pile into puts on a big gap down. And that's why when you see these big gap downs that they end up ripping right at open, is that they like to trick and trap people, and people pile into puts and at open, and they just rip it. So that's the mentality I had right here, and it just never did, not until it got down here, then it actually decided to rip. But I should never have taken that, but this was a good play. I would have taken that again. And over here, I definitely see why I did that, because you got this area right here, which is pre-market. I mean, the high days right here. I busted through, could have been a fake out, and it came back through, and when it broke below this 439.25 area, that's why I grabbed puts. I grabbed a 44.10 at 550, then it ripped. Then I end up taking a loss on that, so I'm crazy. Then I switched to calls. So I grabbed calls at 350, which is right here. Okay, I can see why I dropped it here. 20 EMA held. I bounced once it got over the 439.80. I can see why I grabbed it right there. The 44.10 calls at 450, and they went from 450 to 490. I think I actually grabbed it right here. Then it dropped. It came back up. So I think I grabbed it right here. This is a timestamp. I grabbed it here. So yeah, I don't know. It's hard to tell. Maybe it started here, dropped here, went up. I don't know. But anyways, the last, I've been trying to stay away from the last half an hour of the day, but every time I try to do so, sometimes I get into play right at like 3:30 or 3:20 for a quick move, and I end up holding it thinking that it's going to happen. Then it just ends up being a loss. But yeah, I've been trying to stay away from the last half an hour of the day. If you've been in the room trading, I have had to do so many crazy things over the last year. Like I remember the first part of the year that we had so many fake outs in the morning that I started to take losses in the first 20 minutes of the day. So I started waiting out the first 30 minutes to even an hour of the day, because you'd have 1 to 2 fake outs. It was so calculated that you could literally count the 2 fake outs, then the move. It got so predictable at one point. And trading, it's always changing. You will just have to evolve and change with it, and identify what's happening. Like right now, like I said in the beginning of the videos, when VIX gaps up, it likes to sell off, and if it sells off, that SPY is going to end up going. So this was the 5th, right? Yeah, no, 6th. I get the wrong thing right here. And this was the thing that was kind of confusing, was that it had this massive run up right here on VIX, and yet it just kept going. It was a crazy move. I was not expecting that to end up happening right here. So I know I just keep rambling this, but sometimes just it doesn't happen the way you predict, because normally, how many times have we done this in the room where it gaps down, then it rips, and we take it while everybody else is piling the puts? This time I didn't, and I just should have not taken this play at all. So I could have avoided that loss. This loss right here, I would have probably ended up taking it again. So it is what it is. Now on the Friday was the 7th, right? Yep. SPY calls over 440, which was right here, the wick of this candle. It dropped down. We had news in the morning, unemployment, stuff like that. The market didn't like it. Then it just ripped it open. And it's just, the market has been doing this so much lately that it will, if it has bad news, it will ignore it and just keep going. Or if it's got bad news, or react negatively at first, then it will rebound like nothing ever happened. The SPY acts like a spoiled little toddler that's just, it's got the attention span of a toddler. That's just like, okay, it's bad, and boom, I forgot about it already. SPY just loves to do that crap, and it's just very crazy the way it acts. So I had calls at 9:47, which was right here, first 10-minute candle, big green candle. One of the things I did like about this is, make sure I get the right day here, the 7th VIX. I'm showing VIX because I'm showing how VIX gaps up right here. It gapped up, took off. That was Thursday. Gapped up, then it got slammed right here. But the thing that caught me off guard is that we had bad news in the morning, and I was not expecting. I mean, it popped right here. I was like, okay, it's going to reject pre-market high. So when I had the green candle, I took the calls. I took the 44.15 calls at 720, and then went 720 to 870. Then it dipped right here, and I bought calls at 1013. Why did I buy calls right here? I'm not quite sure why I bought calls right there, but I bought calls there anyways. But the 44.15 calls of 425. No, I bought it at 1013. I don't know why I grabbed it here. I grabbed calls right there, 1013, right there. I grabbed them at 770. Then I added more at 1035. Okay, I get why I kind of did down here. I was expecting it to stay in the range. So I added more at 310, making my average 425. I think that I had 5, and I added 15, making my average 425. And they went from 425 to 650. So I got a nice little play out of that. I'm not quite sure why I bought puts right here. What was going on right here? Not quite sure. But I knew the one thing I did not like when I got that pop right there, I did not like this breakout right here. So I was not going to take calls right here, and I'll tell you why. Because it's 1140 right here, and VIX is down here at 1140. I mean, look at VIX is already, back out a little bit. VIX is already down here, pretty much filling the gap, well, halfway filling the gap from the 2 days before. So it did fill this gap right here, and then it's making low. It's down underneath under the 1460-ish area. To me, I was not interested in buying calls right here. I didn't think we'd get much of a push. Then it just has this massive push. I mean, look at this massive push, and And this push didn't happen till 11:50, which is right down here. Right here. This is 11:50 right here on VIX. Now, you got this little bit of a move, then it started to rip when this is happening right here. So this is SPY, and this is the time frame right here with SPY. It dropped a little bit, then it popped. There's no way I was taking calls based on VIX barely moving and going up. I was not comfortable with that whatsoever. And SPY is raging, and VIX is just like not making new low a day, and I do not like seeing that. So you can trade it. I'm not. I ignored it. It went straight up. I wasn't touching it. And I wasn't even sure where the top was or what was going to do. And then after the day before, I thought top was in right here, and it ripped more on me. I saw this right here happen. And I think I actually took this in my challenge account. I think right here maybe. But I was looking at puts right here. But I didn't take it because I was afraid of this happening right here. Get a nice little area right here. It dropped down, then it ripped on me. Pretty much the same thing right here. You get all these little cluster of candles right here. I liked it underneath the 441.50. I just didn't think it was gonna drop. I mean, I wasn't quite sure what was gonna happen. I was not expecting this kind of a move, so I just stayed out. Then I ended up taking calls at, like, say 327, which is down here. I grabbed it right here. I grabbed a 44.15 calls right here, and at 520, and it just had this massive dump, and it just did not end the day well. And I was done. I had enough for the week. I wasn't going to do anymore. This Thursday and Friday was just very, very crazy. I think that I just had the wrong mindset. I mean, you just look at this, and I probably would have done the same thing. I should have never taken this calls. I should have waited for it to get over 439.70 is what I should have done. I should have never tried to grab the bottom right here. I just don't know why I did that. But yeah, usually when you have the big gap downs, you usually see SPY. All retail is going to jump in and open on puts, and that's when you usually see SPY rip. Then this day, you have bad news, and SPY ignored it, which we played it right at open, but I just I don't know why I grabbed calls here. I see here, I know why I averaged down. I was assuming that we were going to stay in the range, and that ended up being a decent play, but I could have gone horribly wrong. Definitely could have avoided that, but if I did avoid that, I probably wouldn't have played it. In this massive breakout, I wouldn't have played because of VIX. I mean, like I said, VIX was right here. This is a timestamp right there, 11:50. And this is 11:50 right here. I would have never taken calls on that, just on VIX, because of that. To me, I didn't like it, so I stayed away from it, even though it was a big move. And just because it's easy to look at everything after the fact and realize, oh, I could have taken it there. That would have been a big move. But what if this move never happened? What if this move just dumped? You don't know when you're trading in real time. You just got to use all the data that's in front of you and make the best educated guess you can to try to get a good play. And to me, I thought this was a fake out. I thought we were going to get a pop, then it was going to drop. To me, I didn't think that we were going to pop this hard based on the way VIX was acting over here. That's just part of trading. It's all about probabilities, and to me, I did not like the way it was looking, so I did not play it. And probably could have played it better, but it is what it is. Hopefully next week will be a better week, and I know this recap is probably done a lot of rambling, a lot of repeating, but it is what it is. It's part of trading. I'm just giving you the mindset, what I was thinking, what I'm thinking, what I probably could have done differently. But yeah, like I said, it's easy to look at things after the fact and see how easy the trade is. That's why it really annoys the hell out of me when you go on Twitter and you see all these furus post charts and say, oh, you could have taken a trade here, you could have taken a trade there. Yeah, it's really easy to point out all the trades after it's all said and done. Try doing it in real time, because people that do it in real time, they're not always going to be right. I mean, because it's just the way it is. So thanks for the ramble listening, and that's going to do it. So thanks for watching.